The key to building wealth is to have a high-risk, high-reward investment. You can own a piece of the paradigm shift if you invest wisely. Enter Veritaseum and the Veda.
Great opportunity to come into the Blockchain Investment and Innovation Summit, and came along specifically to see Veritaseum and of course the great speaker, Reggie Middleton.
I'm bringing the entire team over to Dubai from 3 different continents, Central Asia, India, from Korea, Poland, and the US. We get to see Veritaseum in its myriad diversity. Not only do we have people from all over the world, 3 different continents, but we also have a wide diversity of expertise. You've always had an existing infrastructure, a legacy that controlled everything, basically the bosses. Technology has never eliminated bosses. Technology has never destroyed the industry. Technology has never put a company out of business. What technology does do is it enables a new business model. And that new business model usually destroys the old business model that wasn't as efficient. Okay, when this technology comes across in a big way, it's called a paradigm shift. You know, you have one paradigm, the way things used to be. You have a new paradigm. When the new paradigm shifts over into the old paradigm, it brings a new technology with it. And that new technology enables a business to create a new business model that crushes the profits and margins of the old business model. So going through our time, one of the earliest inventions, the wheel. You know, mankind probably chiseled a rock in a round shape and was able to roll it. Wow, this is a lot easier than carrying a boulder. Second would probably be the invention of fire. And then you had electricity, gunpowder, the microcomputer, combustion engine. And then as time goes on, the distances between these paradigm shifts get shorter. Between the wheel and fire was probably 1,000 years. Between fire and the combustion engine was probably 100 years. Between electricity and the combustion engine, smaller. Between electricity and the microchip, which powers computer, you're talking decades. Between the computer and the internet, you're talking maybe 20, 30 years. Now, 20 years between the internet and the blockchain, you'll see this compression of time become rampant. The blockchain was invented in 2009. The first strong applications came out in 2013, which was the first Veritaseum app. Okay? In 2018, 5 years later, we have the Veritaseum Veda, which is a financial machine which literally replicates the function of every banking institution. Okay, the major primary profit-making functions. The biggest difference is it enables everybody to do business direct. Peter can do business with Paul without Goldman Sachs. Paul could do business with Angela without Merrill Lynch. And you could do it cheaper, safer, and more transparent. These paradigm shifts. Now, the technology enables this. The technology is not going to damage your banks, but the new business model implemented by a startup like Veritaseum allows us to do this at a profit margin that banks can't touch. And it's that business model that will drive many banks out of business, and the banks that won't drive out of business will have to transform and become more efficient and give more value for the dollar. That makes the whole world a better place.
Founder and CEO of Veritaseum, Reggie Middleton.
Okay, so I am the founder and disruptor-in-chief of Veritaseum. Veritaseum is a blockchain and smart contract startup. The last significant paradigm shift was the internet, okay? And that was roughly 1993 when it started becoming popular. About 2000 or 2001, it was almost indispensable, okay? Most people think that the internet was the greatest and the latest of the paradigm shifts, the technological paradigm shifts. I'm here to tell you that it's not. It's the blockchain. Okay, and the attributes that are associated with the blockchain. So what we do is we take the blockchain and we write smart contracts on top of the blockchain. Smart contracts are a software-coded version of a legal contract, like a contract of sale, to purchase a car, or a social contract. You promise to bring your girlfriend out to a date, 8 o'clock, to a nice restaurant. But these smart contracts have special attributes. They are unbreachable, so they can't be broken. They are self-administering, and they're self-securing. And they execute automatically on the blockchain. Okay? Most blockchains, the big blockchains such as the Ethereum blockchain and the Bitcoin blockchain, have never been hacked. So that in itself gives inherent security model that's superior to every major bank. Citibank, JP Morgan, European banks, even the New York Federal Reserve. The New York Federal Reserve was hacked. JP Morgan gets about 200,000 hack attempts a day. Who knows how many are successful, but I can guarantee you quite a few of them are. So we take this guaranteed security model, thus far, heretofore, we take these small contracts that are self-executing and unbreachable, and we create business models out of them. These business models replicate the business models of extant banks, such as JP Morgan, Citibank, etc. Except software code doesn't need compensation. Software code doesn't need a bonus at year end. Software code doesn't need to buy an Azimut yacht next year. Software code doesn't need to buy a mansion. So we execute the business models of the big banks at a margin so low that the conventional Wall Street industry can't compete, assuming we execute at the same level. So to go through the entire business, we have a team of researchers and analysts. I'm known, if you Google my name, Reggie Middleton, or if you say introducing Reggie Middleton video, you'll see I'm known for calling big macro trends. I predicted the fall of Bear Stearns in 2007, about 6 months before they collapsed. I predicted the fall of Lehman Brothers, Journal Growth Properties, which was the second largest real estate investment trust in the States. I predicted the European sovereign debt crisis and named about 5 of the countries by name in the order that they collapsed or fell. I did the slight fall of Apple, the rise of Google, the collapse of Research in Motion, altogether roughly 100 calls. This wasn't magic. It wasn't a crystal ball. It wasn't luck. It was basically doing old-fashioned fundamental research. So we take this forensic research analysis and we bring it to the blockchain. So now we research cryptographic assets. Most know it as Bitcoin and Ethereum, but we also do entity assets, which are populists and basically companies that create an ICO and have a token and operate on it. Right now, this is probably the hottest investment sector out. Everybody has a lot of interest in it. But they don't do old-fashioned fundamental analysis. What they do is they trade, do momentum trading, or they take the top 10 assets in terms of market capitalization, which really doesn't mean much because you don't have much in terms of liquidity. And they simply create an index and they sell it. Now you have hedge funds that come in and charge relatively exorbitant prices, 3% of assets under management, 30% of profit. They're growing quickly, but it is not fundamental analysis. The only way to actually make money is to be able to count the money. So I have analysts, there are 5 of them, they're distributed around the world, and they help create research reports. The most recent scan, we went through about 450 initial coin offerings. We reduced it down to 58 as a short list. We then reduced it again to 20, and then to 10. This is what a research report looks like. Now I'm going to pass it on as I speak, and I challenge anybody to see or to tell me that they've seen analysis at this level for anything in the cryptographic universe. Now, what makes this special is the fact that the only way to, and I don't want to use the word predict, but the only way to tell if a company can make money is to count. So just pass this around, okay? Take a look at it. And so what we do is we count the money. We take a look at a prospect. That particular prospect is called Populous. They did an initial coin offering last year, and what they do is they bring small contracts and blockchain technology to invoice factoring. So if anybody's not familiar with invoice factoring, it basically allows small and medium-sized enterprises, small and medium-sized businesses, to sell off their receivables, their sales. They get financing up front. Now, interesting business because it allows small and medium companies to finance themselves. But here's the catch. Not many investors and buyers are in the invoice factoring business. So when you sell your invoices, you have maybe one private equity fund or 1 or 2 high net worth individuals. So basically, you have to take whatever terms they offer. And they're usually not favorable to you. What Populous does is it takes the blockchain and smart contracts and it allows the entire world to bid on these invoices. Brings down margins, brings down expenses, drops the interest rate, creates a new asset class for investors to buy. Okay? We took this business model in the business, we analyzed it, we asked the management multiple questions, we researched the entire addressable market, we calculated potential growth rates, margins, etc. So when you look through the report, you see things that you never see in the cryptographic space. You never see on these screens. You see revenues, cash flows, margins, profits, growth rates, management experience, technology, feasibility of execution, number of years in business, competitors. Okay, this is what people who will really make money, this is what they expect. But this is also what you never see. Has anybody ever seen a real research report with real financials in anything in the cryptographic space? Raise your hand. Okay, well, at least 2 people have seen it because you have my report, so raise your hand. Okay, thank you. Now, Populous is one example. Populous has roughly 4 or 5 competitors in the space. So what we do is, if we think those competitors are worthwhile, we now research those competitors. And now we have a database of invoice factoring companies. So we ask the management of those competitors the same questions with the same metrics. If they come back, we create a model, and each model is custom built for that particular company. We're just getting started, but we are by far the premier research arm of the cryptographic universe. So where you have the blockchain, you basically have Veritaseum in terms of being the sheriff. Now, after we did this research, right, and we say this company Populous with this 50-page report is worthwhile. Let's say we assume that their tokens are worth $20, okay? Populous may be trading at $2. So what do you do with that? The average investor, would probably go and buy Populous or might not even understand the report. So we've created what we call the VEDA, Veritaseum Autonomous Dynamic Interactive Distributed Interactive Research. Basically, we take the research, we feed it into a smart contract. That smart contract is linked to 20 other smart contracts, and they work as a machine, gears in a machine, to replicate your Goldman Sachs, your JP Morgans, your Mitsubishi Banks, your Morgan Stanleys, etc. Okay? It actually takes the research, it goes and purchases the subject of the research in the open markets. You can have contracts that actually do that. Yes, it's a technological marvel. So it goes and purchases these assets and brings it and holds it in a smart contract. It then allows holders of Veri, which is our token, and our token represents prepaid fees for our products and services, or basically the key to get in. It's just like when you buy a ticket to get on a plane, the ticket represents the paid fee to get on the plane. Veri represents the paid fee to get into our financial machine. You pay the fee to get in the machine, which is a Veri token, and then you have access to the portfolio. It purchases the contents of that portfolio for you on an individual basis. And now we've taken research to the next level. Okay, now is the research unique, comprehensive, unparalleled, with no competition, but instead of just reading research or attempting to act on your own, you can have a smart contract, a set of smart contracts, execute the research for you. So now it purchases Populous in between the valuation bands, above the minimum price, but below the maximum price, so you don't overpay for it, according to our research, and it creates a portfolio. This portfolio could be up to 99.9 years. So the Veritaseum, the VEDA application is an investor's application. It's not a trading machine. You don't go in and out. You don't try and hedge short positions. There's no churn. Basically, it takes the best of the best, the cream of the crop. It gives you exposure to it. So you have Populous. You have others such as PayPal, maybe Ethereum. You have Monero, because it also researches platform entities as well. A platform token would be a token that represents, say, Bitcoin and blockchain. So the Bitcoin token, which is lowercase b, is representative and trades and travels on the Bitcoin blockchain, which is a platform, capital B. Same thing with ETH and Ethereum, Monero, Zcash, etc. So we pick the best of the best. We create a portfolio. That portfolio is customized for you. And whenever the prices are out of our valuation range, it will not purchase it. Okay, whenever the tokens are not available, it won't purchase it. Now you have a custom portfolio fully vetted by a team of 5 expert analysts. Okay, one of those analysts has 13-year track record of calling some of the biggest macro and fundamental trends to date. So what this is now, can anybody guess what industry I've just disintermediated? I'm going to ask for a little participation. Somebody raise their hand, or I'm going to pick on somebody. Nobody? Okay, I'll pick on you. What industry does this look like? Excuse me? Financial services. As a matter of fact, one financial service where the employees make a lot of money. Think of hedge funds and hedge fund managers. Now, hedge fund managers do this as well. They allegedly do a lot of research. They pick the best assets, and then they wait for the assets to go up in price. Okay? Couple of big differences. Hedge fund managers, hedge funds in general are partnership. You have a general partner called the GP, which is the manager or the manager's company. Then you have limited partners called the LP, which are the investors. When you go in as a limited partner, and it's usually high net worth individuals, other funds, sovereign funds, wealthy individuals, etc., they purchase the LP, and then they get what is called a lockup, with 5 or 10 years usually. So your money has to be locked up between 5 and 10 years in order to participate. Total lack of liquidity. You participate in the Veda, you put your capital in, you could create up to a 99.9-year contract, which means your capital is locked up for 99.9 years, or 1 year, or 6 months, or 3 years, or whatever you choose. Now, if for whatever reason you want to get out, you simply click cancel contract, okay, and the contract will unwind, and it will either sell the tokens off for you in the market, or it will physically deliver the tokens to your wallet. This happens instantaneously. So unlike a hedge fund, unlike any other fund, a private equity fund, a venture capital fund, etc., you now have total liquidity, number one. You also have total control, number two. And you don't have a lockup. You actually get to decide how long your capital is invested for. You get to decide the contract. This is a totally different world from the fund industry, with funds being hedge funds, private equity funds, venture capital funds, mutual funds, ETFs, etc. Big, big, big difference. How big a difference? Well, let's go on to pricing. Right now, the Veda charges you a flat 5%. 5% for any exposure for any length of time. Okay? Let's compare that to the typical hedge fund. 2% of assets under management. So you invest $10 million, okay? Right off the bat, you have to pay $200,000 for that first year. You also pay 20% of all profits in the 2 and 20 model. So let's suppose, and the tokens that do well do very, very well. I don't know if you're familiar with the metrics, but I will use the Veritaseum token. And the Veritaseum token is A, a utility token, number one, okay, and B, the utility is access to the Veda. It's not meant to be an investment, but we're going to use actual price action to give an example of what would happen if it were the subject of a hedge fund. We launched the Veritaseum token at $1 on April 25th, which is my late father's birthday, so it's a little sentimental. Right before the launch, the price of Ethereum went up a little, so the token value went up, the token price went up to $1.60 at launch. Right now, it's trading at about $105, $110, let's say $100, $110 to round it off. So from May of last year, from April of last year to date, which is March 19th, we're talking exactly 10,000% return. Okay, so if that was in a hedge fund, okay, 10,000% return, if you were to put $10 million in, you'd have paid $200,000 for that year, and then $10 million times 10,000% is an awful lot, right? So what would that be? A lot of money. But guess what? Out of that lot of money, let's say it was $200 million or $2 billion. Let's say $200 million. I'm not going to do the math. You see my weakness, right? Out of that $200 million, you also have to pay the hedge fund manager 20% of that. Okay, so they get 20% of that $200 million, which is an awful lot. Okay, so $40 million plus $200,000 up front, compared to a fat 5%. You see the massive difference in pricing? So this is designed, like I said, to undercut the legacy institutions at the knees. Now, of course they could compete with this, right? How could a legacy institution compete? I'm going to pick on somebody. First, raise your hand. I get a volunteer, then I'm going to pick on people. How could Wall Street and the hedge fund industry compete with us? Say it again. Lower prices, right? But in order to lower prices, they have to pay less in compensation. The financial industry culture and Wall Street in general in New York and other financial centers, such as those in Europe and the EU and those in London, those in Canada, those in Asia, cannot lower prices because they can't pay less in compensation. The culture demands significant payment. The financial industry, and I'm going to speak from where I'm very familiar with, the U.S. is the only industry in the world that I know of where the employees actually make more than the owners of the company. Okay, so imagine you had a startup, you created a company, right? You're the majority share owner, you work very hard, but your employees consistently make more than you year after year, day in, day out. Between 35 and 60% of gross revenues goes to compensation. That's before paying the expenses of the company. Okay, this is industry-wide. So if the only way, and I think you're correct, that they could compete by lowering prices, but if the only way to compete with these smart contracts, with this software, is to lower prices, and you can't lower prices without losing your employees, how do you compete? Now let's suppose one company, such as Goldman Sachs, decides, yes, we're going to compete. We're going to lower compensation costs so we can lower prices. As soon as they lower compensation costs, all of their start talent, which is the only inventory they have, because other capital is a tool, but the actual inventory is the human capital or their employees. When they lower prices and lower compensation, all the star players run over to JP Morgan. JP Morgan says, well, I'm going to lower prices. They run over to Morgan Stanley. Morgan Stanley says, I'm running prices. They run over to Asia. Daiwa Bank, Mitsubishi Bank. They lower prices there. They run over to Europe. So this is basically whack-a-mole. As they're playing whack-a-mole, we gradually take more and more of the customers. The reason we take more and more of the customers, A, we have a very unique product. B, we have a head start. And C, there's no reason for us to lower prices or increase prices. As a matter of fact, transparency is our advantage. You know, there's a commercial when I was a kid from Sims, the clothing company, and it said, an educated consumer is our best customer. With us, the educated consumer is by far the best customer because they realize transparency is the key. Now, I don't have a live version of the app, but if you were to click any transaction, it brings you out into the blockchain, into something called a blockchain explorer, and you get to see the path of each and every transaction, not only the amount of the transaction, but where it went and where it currently stands. We give you 100% transparency. Okay, we benefit from transparency because the more you know about the transaction, the more comfortable you feel with our product. Now, on the other side, the legacy competition has a totally different business model. They benefit from opacity. Okay, so the less they know about the less that you know about the transaction as a client, the more profit they could pack into the transaction. So the fees are either convoluted or not stated, or they're mixed in with a bunch of other expenses. Okay, the transaction is usually closed behind closed doors, and you don't know your counterparty. Okay, oftentimes costs are hidden in spreads, they're hidden as commissions, they're wrap fees, etc. This is a totally different world. So I started the conversation off by saying, what? You were supposed to remind me of something. What was it? What was it again? That's right. Truth, trust, and disintermediation. So this is where we are now. Veritaseum is the name I came up with in my sleep. Veritas, the Latin root for trust. Eum is a made-up word I made for element. It's E-U-M, because I think someone had I-A-M, but whatever, okay? So Veritaseum benefits from truth. It benefits from transparency. We are the antithesis of the legacy system, number one. Number two, trust is our business model. Okay, to explain how trust works in terms of a blockchain environment or peer-to-peer economy, I could be sitting here with my mother. I love my mother, and I trust her. So I could do a financial transaction with her, and I have no worries whatsoever because I trust her. Okay, I could bring my son, who I trust, with my life as well, and I could do a transaction between my son and my mother. But the more individuals and the more entities that I bring into the transaction sphere, the less I'm able to trust each and every one and the entire transaction. Once we get to this entire room, you all look very nice. I love you guys, but I can't trust you, okay? Not even an ethical issue. I don't know you. You may have hidden credit issues. I don't know your balance sheet. You may be malfeasant. I have no idea what's going on, simply because I've increased the sample size. Now, when we go past this room and think of all of Dubai, much harder to trust the participants. Go to the UAE, much harder. Now we just think of MENA, even harder to trust. Outside of MENA, you think of the Western Hemisphere, Eastern Hemisphere. Okay? So what Veritaseum does is eliminates the need for trust, and by eliminating the need for trust, you can do transactions with anybody with full confidence. It eliminates the need for trust by making everybody enter into a standard smart contract. You escrow the value to the contract. Now, no party can breach it. No party can break it. It's absolutely irrelevant what your balance sheet says, what your credit history says, or your intents to defraud.
What makes us stand out relative to other companies is that we're the only ones providing a framework, which we call research, to understand an investment in the blockchain industry. One of the things that's really unique about our products is that it's cost structure. You can enter into a very long-term contract to acquire undervalued assets at a 5% upfront fee of your exposure value. That's unheard of. Just to give you a point of reference, 5% for a 5-year contract is so low. You're typically paying these institutions 2% to 1.5% per year. And over 5 years alone, that's close to 10%. And then on top of that, Veritaseum doesn't take any of the profit that you've generated on your investment. So, which is where most of the fees for a lot of these hedge funds go to. For example, a traditional hedge fund on Wall Street will take 10 to 20% of the profit, and we don't have that as part of our revenue model. And that's extremely disruptive. And when you combine that with our research, this is one of the reasons that technology is a key focus, because through the technology you can effectively add value to the investor or to the acquirer of these tokens in a way where a traditional Wall Street firm never could.
We have policy procedures. The regulators provide quite a level of regulations that we can follow and make sure that the companies are aligned or the banks are aligned to these regulations. There's a lot of legal components to it. The lawyers are giving us one set of directions. The regulators are within the different regulators. They also have different views. And so at Veritaseum, we're not here to really challenge or not meet the requirements and fight the regulation. We're here to really try to understand them and meet the requirements and trying to put that on a blockchain to reduce costs.
One of the reasons we've come to Dubai, as well as attending several other conferences around the world, is to get the message out about Veritaseum and the opportunity to use this platform in so many different ways that will help various industries facilitate their transactions and also open themselves up to greater liquidity in their transactions. It's a very strong financial machine in that it really can impact financial assets and allow people to exchange assets on a peer-to-peer basis in the financial arena. But it also allows people to interact on a number of other types of assets, potentially real estate, potentially in the healthcare space. There are so many different uses of Veritaseum, which is one of the things I really love about this opportunity to work with the company to help it grow and become a global platform almost anyone can use.
Veritaseum intends to change the dynamics in the financial world. You have intermediaries at different stages, whether insurance companies, banks, or in the capital market you have brokers, etc. Veritaseum intends to create a P2P contact where people deal directly with another person who is the buyer or the seller, and they eliminate the middlemen and cut down on the costs.
Well, I got involved in Veritaseum a little bit by luck at the beginning. I was very much interested in the cryptocurrency space, and this was a name that came across my radar. And did a little bit of research about what they were doing, knew of Reggie's background in terms of television, so liked the personality and the passion behind it. It's available to anyone.
After meeting Reggie, I was really taken aback by him and the work that he's doing. I really believe he's a genius at this blockchain technology business. And the way he talked about it, educated young kids about it. We went to Jamaica, I introduced him to the stock exchange in Jamaica. Being a Jamaican myself, I wanted the best, always looking out for the best for Jamaica. And so I thought this was one of those things that would really help to turn my country around. You want to know more about Veritaseum, I would say go to Veritaseum.com, or if you want to know more about the CEO and founder, Reggie Middleton, you just say to your Google, tell me about Reggie Middleton and Veritaseum.
I'm 17. Near term, I plan to go to college. Long term, I plan to grow Veritaseum to what I think is its full potential, a global financial force. And I plan to see it connecting people around the world, getting everybody who wants and can be involved in financial markets to be able to do so. My definition of success is to leave a legacy behind me for when I pass on. To me, legacy is something that people remember you by for forever, and they can remember my future descendants for things that they've done and connect it back to me.
Just getting back from doing a presentation on the effects of blockchain on the public sector, and did the keynote speech as well shortly thereafter. I thought I did a very good job. I like to speak, and you combine an affinity for speaking with the actual energy and drive of being involved in Veritaseum, number one, and the blockchain industry, number two. And I got to express myself, and I got to explain what's coming to the forefront. So I felt like I was both educating and entertaining at the same time. And I feel receptive from the audience. I got a lot of questions, a lot of feedback, and I think this might be the genesis of Veritaseum in this area of the UAE.